Hello everybody, this is Martin here with the closing bell for week ending 19th of June 2015. As we have seen, finally the market has recovered back. Last week, looking back at my notes here, we did say that the market is experiencing dead cross and sideways market will be, but on a weekly basis, we have not crossed over to, no, we are on the danger area. Let me just show you what I mean by the weekly here. And this is the weekly chart. Okay, so you can see from the weekly chart, we are in the so-called, how many weeks have we been down? 1, 2, 3, 4, 5, 6, 7. The worst we ever gone 7 weeks, and also the one NDB news that is up now. Please excuse me for this wide range bind here. It's not supposed to be there. Uh, if I refresh this, it will disappear and come back again. You can see that. So it is now at this base building in here, so it's likely next week. Let me just make a note here. Uh, Move sideways. Okay, it's been down for 5 weeks. Okay, 1, 2, 3, 4, 5, 6, 7, 7 weeks. Okay, uh, down bar 7 weeks. Okay, we have not have this extraordinary weakness or really huge selling that we see other than the one MDVB. Now the question is, will we be supported here like what we did when we hit through this the so-called 200 moving average for the weekly chart, which is 1000. Or now we are really in bearish mode. Typically, I'll show you the dead cross after this. Let me just get back in here. Now this is a daily chart. Let me switch to a 50 in here. You can see we already cross up nicely in here. That's where sometimes, in my opinion, dead cross tend to be very lagging in the sense that people would have sold it and then the markets tend to taper off in there. So a little bit of economic know-how would help you. As you can see, we are sort of sloping in here. There'll be a lot of SOS, sign of strength, testing in here, perhaps a two-bar reversal. So those are the things we wanted to be looking at. Same thing here too. As soon as it crossed up, right? If you look through here, the market was turning down, and that actually tells you the market has no way to go except really sideways as far back as going back to November 1860 to 1720. We have this nice recovery since December, but since then we've been 1.5 months, coming to 2 months actually, coming end of June, 2 months of corrections. We have 1, 2, 3, 4, 5 months up and 2 months down, which is not too bad. A lot of people have to bite their bullets and just move on from here. Okay, so that's the KLCI. Now KLCI now it's 17. Let me see, 1712. Okay, 1712. And last week we were at sorry, 1721. 1721, but the CPO, the FKLI is still in negative territory, almost 9 points discount. So that's a 9-point discount in here. Market may turn up very soon, so just be careful of that one. The small cap stock has recovered back, only the mid cap stock has not. So that's what we're seeing in here. Other markets regional also sold off because in tune with the Shanghai, this is the one, the killer one. You can see in here, Shanghai went down by 6%, which is in bear territory from the top high, which is 20%, and that's how fast they actually sell down. Having said that, last night US FOMC statement has been saying we are likely to have a slower pace to interest rate hike. So that means we saw a nice rally in the Dow Jones, almost 180 points or 1%, which is down here. That prompted the market to move higher. Again, a lot of people don't like this kind of weakness. Any weakness that they get, they want to sell ahead. So that's what been seeing in here. Let's look at the chart here. On the mid cap stock, you can see we have 1, 2, 3. Let me just draw. Yep, here you can see we probably have a support here at 12,980 in here. We might see a rebound for the mid cap stock way to 1320. It is still in a nice downtrend channel in here. Really haven't moved out. It's a bit premature to say that everything is well, and we're going back to uptrend. So we can see 1 2 3 3 bar up. We might see a bit selling next week. I don't know, but judging from here, if you draw your trend line, you can see this is the resistance at 1590 for the trend channel. So that's going to be interesting to see what it will do when it hit this. Likewise, this is just partly a corrections that we normally have. Okay, let's look at the foreign funds flow. Only thing that's positive was on the 17th of June, which is Wednesday. We have a first time just 14 of buying. But yes, so yesterday, nothing actually went up. You can see in here, everything was so bad. There wasn't any data available in here. So we can see uh, 1st of June until now, it's almost 2 billion of net outflow. If you look back at May, that's another 2.4 billion. So even last 5 months, about negative 7 billion outflow. That's telling what's happening to our market. Pretty bearish in the sense of all things. Okay, let's look at Singapore in here. Singapore is also base building here. This level here, right? It dipped below 200-day moving average, just like us, but notably, it hasn't really crossed down yet. Okay, we have this cross up somewhere here. So dip below, you can see also this 3,370 becomes a resistance in here, trying to retest whether it can break or not. So for the KLCI as well as SGX, it has been very difficult to make money. So it's a lot of to do with stock pick, manage your stops, and if you need to cut, you have to cut, right? If you have profit there, you have to run, So that's the situation that we have now. On the FKLI, we didn't have that's what here we're going to have a lot of sideways here. Market sell down, but there wasn't any follow through. Market open lower and try to close back. That's going to be tough making money in here. You can see lower prices were rejected at 1700 level in here. And don't forget, this level 1750 is still trading at 6 point. I believe it's a 6 point discount as we have now. Yes, 6 point discount. So although yesterday we hit 1700, so market did recover back nicely for that one. So that's not too bad. Huh? On the CPO side, you can see the weakening of our ringgit. Weakening of our ringgit. That's prompted the market to go higher. But as of now, market's trying to close back. The gaps that we see here are 22.25 in the 22.15 here. This will provide some sort of support here. There's not much of a pattern we can trade here. Not, you can see, in hindsight, it's easier to say try to break down, market gap lower, open higher. It's going to be more of an intraday trading, perhaps using a 15-minute chart. That's what it is. You can see market open up today. That was this one here. Yep, 10:30. 2:30 and then straight all the way up, only almost at lunchtime only. 12:30 and yeah, 12:30, that's only one only. And the big movement was just over lunch, not really easy to make money in CPO. Let me change that back to a daily chart. So we done the cloth, we done the small caps. Let's look at the original market in here and then look at some stocks in here. Now remember last week we do have a sell-off in here. Here we have is the first one is the US Dow Jones. Now you can see Dow Jones here, that again there's a just ignore the other one. We have a nice break back up to the 50-day moving. You can see many times it did break below the 50, supported at 1780, break back up again. So it's range trading in here. Partly due to reacting to the US FOMC statement that rates will be raised later than higher, and as such, market did come down and now going back up again. Hang Seng again taking up a queue between fight between the husband and wife. Probably the wife is the Shanghai market and the husband is the US Dow Jones. So you can see for first time Shanghai broke below the 50-day moving average, and today is down 6%, which is, in my opinion, quite high, and that has rattled a lot. Although there are a lot of pundit and analysts saying that, look, this market has a lot to drop off. And let me see here. The high was 5178 5178 times 80, so that's 4142. No, it hasn't gone down. No, it's only 4478 divided by 5178. So it's only minus 1. It's only gone down by 13.5%, which is a lot for exchange. 1, 2, 3, 4, 5. In 5 days, it gone up by 13.5%. If it does happen to our market, I tell you, a lot of people will be screaming and really getting out and moving out somewhere else. You see, that's what we have seen here. You can see we broke through this. There's no volume here, so it's kind of difficult to justify how the Shanghai market is going to be. It'll be great to have some volume like we have for Hang Seng. We don't have that one. Nikkei again trying to test the 50-day moving average in here. Should able to hold up, I believe, if you do see another rally tonight. Now, going back to rally, let's look at the volatility index for weeks, which measures the US put to call options. Now, last week, weeks was doing 12.85. Okay, last week. This week, we are at 13.19. Not much of a change. Again, testing lower to 12.5 would mean Dow Jones going higher, but it's going to be a 50-50 thing. Dow Jones might just close up 30 points in here. As I said before, markets is now ranging, becoming very tough to trade. Those who like to invest might put it into some dividend stocks, okay? So dividend stocks might just help you to do that. So we done the wicks, we done the FKL regional market. Now let's look at the gold versus the ringgit. Okay, gold versus the ringgit. I think ringgit has strengthened back a bit. Yeah, that strengthened back and then revert back. It was at 3.73 and now gone back up in here. There is a strong resistance, or in this case, it's called a support at 3.73. So it's people are saying that this is just like the crisis that we have back when we have the financial crisis, when the market went back up to 3.8. Now it's back to 3.73. Again, 1 MDB seems to be the question. I think there are a lot of media out there that you can read, which actually give you a tall tale about this thing. But again, going forward, if it does 3.75, we are heavily sold off in terms of the ringgit. I do see ringgit coming back to 3.65. Okay. Now let's look at the gold, and